Thousands of individuals in the UAE personally own real estate, apartments, commercial units, holiday homes, warehouses. And many now ask the same question: does UAE corporate tax apply to my property income? Some assume the answer is no, that property income is never subject to corporate tax. Others assume yes, that once rental income crosses 1 million dirhams, registration is automatic. Both assumptions can be wrong, and in corporate tax, relying on the wrong assumption can lead to the wrong treatment, missed registration obligations, or unnecessary compliance issues. Here is a practical framework based on the UAE corporate tax rules to help you identify when property income may be excluded and when a proper review is needed. Under UAE corporate tax, natural persons are only subject to corporate tax when two conditions are both met. First, they conduct a business or business activity in the UAE. Second, their taxable turnover from that business or business activity exceeds 1 million dirhams in a Gregorian calendar year. But here is what most property owners miss entirely. Certain income is excluded from that 1 million dirhams turnover calculation, including real estate investment income. Qualifying real estate investment income does not count toward the threshold at all. So the real question is not, how much rent did I earn? The better question is my property income excluded real estate investment income or taxable business income? That distinction changes the corporate tax analysis. Under the corporate tax rules, real estate investment income refers to income from the sale, leasing, renting, or subleasing of land or real estate, provided the activity is not conducted and does not need to be conducted through a license from a UAE licensing authority. The exclusion generally applies where no license is required. Where the activity is conducted or required to be conducted through a license, the treatment may change. To see how this works in practice, let's compare three common property situations. Scenario 1. You personally own a residential apartment rented under a standard tenancy contract. Ejari in Dubai, Audiix in Abu Dhabi. These are administrative tenancy records, not business licenses. If no license is required, the rental income is likely excluded real estate investment income, even if the annual rent exceeds 1 million dirhams. Scenario 2. You personally own a commercial property, an office, warehouse, or showroom, leased to a company. The tenant's use of the property does not determine your tax position. Your position depends on whether you, as the landlord, are required to hold a license. If no license is required, the income may still qualify as excluded real estate investment income. Scenario 3. Holiday homes. This is where many individual property owners make avoidable mistakes. If renting out properties short-term requires a permit or license from a UAE licensing authority, the income may be treated as business income, not passive rental income. And if that taxable turnover exceeds 1 million dirhams in the calendar year, corporate tax registration is likely required. Same asset, entirely different treatment, because the licensing position is different. What about property management companies? If a licensed management company manages the property purely as your agent, the manager's license does not become your license. The rental income may still qualify as excluded real estate investment income, but the contracts must be clear. If the company has the right to sublease or deal with the property as a principal rather than your agent, the treatment may change. A key risk arises where real estate is managed or leased through a licensed sole establishment. A sole establishment is not separate from the natural person for corporate tax purposes. So if personally owned properties are managed, leased, or dealt with through a licensed real estate sole establishment, the rental income may not qualify as excluded real estate investment income. It may need to be included in the individual's corporate tax turnover. This is different from property owned by a company. A company is a separate legal person, and its corporate tax position is assessed independently from the shareholder, under the corporate tax rules that apply to juridical persons, rather than the natural person rules discussed in this video. What if your income is mixed? Standard tenancy rental income alongside licensed holiday home income. Part may be excluded, part may be taxable. The incomes must be separated clearly and expenses allocated between them using a fair, consistent, and documented method. One further point on the 1 million dirham threshold is worth stating clearly. The threshold is not tested separately for each activity. If you have another taxable business activity as a natural person, for example, consultancy income earned personally or through another sole establishment, its turnover is combined with any taxable real estate activity, when assessing whether corporate tax registration is required. So how do you assess your own position? 5 questions. 1. Who legally owns the property? You personally or a company? 2. Is the income from the sale, leasing, renting, or subleasing of land or real estate? 3. Is the activity conducted or required to be conducted through a license? 4. Is the property income clearly separated from any licensed business activity, including any activity conducted through a sole establishment? 5. Does your total taxable business turnover, after excluding qualifying real estate investment income, exceed 1 million dirhams in the Gregorian calendar year? If your only income is qualifying rental income from personally held property, and no license is required, you may not need to register for corporate tax, even if the rental income itself exceeds 1 million dirhams. But if any part of your income comes from licensed activity, such as holiday homes, licensed real estate operations, or real estate activity through a licensed sole establishment, that turnover must be combined with your other taxable business turnover. If the combined taxable turnover exceeds 1 million dirhams, corporate tax registration is generally required. Real estate income for individuals is not automatically subject to corporate tax, but it is not automatically excluded either. The treatment turns on ownership, licensing, income separation, expense allocation, and whether taxable business turnover crosses the 1 million dirhams threshold. If you personally own UAE property alongside a business activity, holiday home activity, sole establishment, or company structure, Audiix can review your corporate tax position so your treatment is properly assessed, documented, and defensible. Because in corporate tax, confidence comes from understanding your position clearly, before decisions are made and before questions arise.